Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here to understand what's happening on the domestic front as well as trying to understand the global factors and having our views on several currency pairs, particularly dollar rupee. So if we talk about the FPI inflows for the month of August, the equity flows have been negative to the tune of 20,000 crores, while the debt flows have been positive to the tune of 9,500 crores. But if we talk about Jan till the July end or maybe August, we can say till date, we have seen flows to be positive, but equity flows are fading away. So the equity flows for the year 2024 has been around 15,000 crores, but for debt segment, it is around 1 lakh crores. So I think the debt segment has been going smoothly, but I think equities have been having a some wobble in between. At the same time, if we talk about the reserves which RBI holds, we have seen a drop in reserves to the tune of $670 billion, a drop of roughly around $4.8 billion from last week. This drop has been because of the foreign currency assets dropping by around 4 million. Even the gold reserves dipped as compared to the last week. So these contributed towards the overall FX reserve number going lower. But the good part for rupee has been the dollar index that has cooled off sharply below 102 levels now. It's important to understand what exactly it's happening in the US, where one side the anticipation is the data points are not good, they're not in sync with the market expectations, and thus the market is expecting aggressive rate cuts by the Fed. In fact, to the tune of four rate cuts, also, the market has had been eyeing in it for 2024 itself, and overall for the next year till next year around 200 basis point, which means the next 12 months consecutive, which I'm talking about starting from today. So August till August, around 200 basis of easing is what market is talking about. Now, this obviously raised concerns that okay, if it has to be an aggressive rate cuts, then the dollar index obviously has to cool off. That's what happened. But if we talk about the other side of the story, that retail sales have been robust. If we talk about the labor market data, that also was very good. So I think that the market is discounting too much, or I think the fear which market is having is too high in terms of the aggressiveness. So personally, we believe there can be some interim bounce in dollar index because it's pure sentiment driven move and the anticipation driven move. Though we anticipate two cuts to three cuts maximum for this year 2024, but not eyeing for a 100 basis point cut at this point in time. I think that's over aggressiveness or more of fear, which is keeping on the onslaught of the rate cut trajectory. So some bounce, but if we talk about technical levels, 101.20 acts as the first immediate support zone. In fact, in our last of the session which we did, 101.80 was what is we were targeting that can be the levels which can be tested, which got tested also. But now we think 101.20 can act as a base, while on the other side, 103 half may act as a resistance. So a broader consolidation. Also, if you see the Brent crude prices, those have cooled off sharply. They did see a bounce from $75 per barrel to almost $82 per barrel, and then cooled off back towards $77 per barrel, back to mainly because of the Middle East crisis, just being the talks of the ceasefire has been giving more motivation that there can be no escalations at this point in time. And secondly, China has been adding to a story of slow demand. So I think both the factors have been playing for the Brent crude prices to be lower, which is obviously a benefit for the INR. If we talk about purely the INR perspective, we have seen some kind of relief not touching the 84 levels on the at least onshore markets. NDF, yes, we have seen levels of 84.15 getting traded, but onshore at least 84 has been protected at this point in time, acting as a red line. And we have also moved below 82, 83.80 also now. So I think the broader consolidation range now anticipated is 83.60 to 84 big figure for some more time to play around these levels. Forwards have been seeing a bounce towards around 2.05, 2.10 levels. I think that must sustain for some time, possibly at these levels, not bounce sharply until unless the aggressiveness sustains, which personally I don't believe. I think there may be some cool off in anticipation. So forwards may remain sticky now at these levels, at least for 1 or 2 months. So for dollar rupee, as we discussed, to sum it up, 83.60 to 84 acts as a broader play. So that's all from my side, friends. Thank you so much for your time. Hope you find our video valuable. Thank you.